Welcome everyone to the launch of OMFIF's 10th edition of our Gender Balance Index. I'm John Orchard, OMFIF CEO. We've got a fantastic mix of institutions with us this afternoon, from governments, central and commercial banks, asset managers, regulators, the press, academia and others worldwide. It's great to have you with us. Thank you. This follows on from a launch event we did last night at the Australian High Commission here in London, where we had a very lively and intriguing discussion on this complex and wide-reaching issue, and I'm sure we're going to do that again today. Thank you again to the team at the Australian High Commission for having us last night, and thank you also, importantly, to Edge Certification for supporting the research and the publication. It's greatly appreciated. My colleague Arunima will take you through the findings in just a moment. And as you'll see, there are some elements of progress, but I dare say the overall picture remains pretty dismal in terms of female presence in the executive committees of the world's financial institutions. Across all the entities surveyed in the index, we have an aggregate of 14% run by a woman. And at the current pace of change, as we'll discuss, it'll take another 140 years to achieve gender parity in excos at financial institutions. There are nuances. The pension fund industry is notably ahead of the rest and continuing to improve, and we'll come back to that. Meanwhile, commercial banks, on the other hand, are way behind, I think, which is curious perhaps, since their leaders will have been on countless training courses demonstrating the outperformance of heterogeneous teams. Old habits die hard, perhaps. For those of you who watch the TV drama Succession, very popular in the Anglophone world, you'll have watched in this week's episode how the female contenders to be interim CEO of Waystar, Royco, were quickly being sidelined in the melee to replace the deceased founder in the face of a share price crisis. A mistake, I'd argue. And it was instructive to watch one of those female contenders, and probably the best candidate, immediately shut down a casual instinct among her probable male C-suite counterparts for casual malfeasance and corruption in the pursuit of power and money. It's fiction, of course, but back in the real world, we recently interviewed the greenwashing whistleblower Desiree Fixler, who felt that her gender played a central role both in how the company she worked for, DWS, tried to shut her down, and also in its poor governance in the first place. If you want to find that interview, you can look it up on the OMFIF website. But if the principle of fairness won't motivate financial institutions to fix gender balance, please, the chance for better corporate governance in pretty dangerous and challenging markets really ought to. In fact, Edge last night were pointing to research which shows that companies run by heterogeneous leadership teams have less volatile share prices, and I'm sure we'll come back to that. In our discussions today, we're pressing beyond the headline numbers to look more carefully at the actual substance of the senior roles carried out by women and the processes needed at entry level to bring them there over time. And we'll come back to that in a moment. First of all, I'd like to introduce our first guest speaker, Heather May Kipnis, who's acting manager for gender and economic inclusion at the IFC, where she's done a lot of groundbreaking and important research on exactly this topic. So over to you, Heather.
Great. Thanks so much, John, for the kind introduction. And good morning, afternoon, and evening to everyone joining today's virtual launch. At IFC, we're delighted to be here and to co-host today's event with OMFIF. And let me just start with a hearty congratulations to the OMFIF team and your partners such as the Edge certification on this 10th edition of the Gender Balance Index. The report is, although there's progress on certain various financial sectors, the report's certainly an urgent reminder that we have a ways to go on this journey of advancing gender diversity in financial sectors. And it's striking because we know that female leaders are powerful agents of innovation and drivers of growth and creation. And there's a lot of research reports that are showing the linkage between women and leadership roles and better business outcomes. So whether it's higher returns, lower risk, or greater impact. And just to share some statistics we're finding, I mean, we know in our own research that women in leadership correlates with higher ESG, so environmental, social, and governance standards. but also we're finding that advancing gender equality and women in leadership can be a solution to global challenges, especially amidst the multiple crises. There's a recent study showing, using data from 2,000 listed companies, that found that a 1 percentage point increase in the share of women in management leads to decreases in CO2 emissions. So there is powerful data, and despite this clear business case and the opportunities, the economic potential of female leaders is remaining unrealized, and it's showcased in this gender balance index. And so at IFC, we've been utilizing our capital, our expertise, and convening power in attempts to transform business models that can engage women more fully as leaders. And so I just wanted to share quickly a couple of lessons learned from our journey to set the tone for the conversation. And one is using research and data to inspire action. And so we did some research in the private equity and venture capital sector, and we partnered with Rock Creek and Oliver Wyman to explore this linkage between women and financial performance. And we found that funds that have gender balance generate 10 to 20% higher returns than those that don't. And you'll hear more about this sector from my colleague, Carlos Mayoga, who's joining us today. The second is around being intentional and how we prioritize gender in our investments. We've been seeking to increase the representation of women on boards in our where we have equity investments. And I'm excited to say that we're at about 63% of IFC's nominee directors appointed to boards are women. And so we're on our way to beat our target by 2030. The third quick lesson is really, companies need support to be able to reduce these gender gaps. Research and frameworks and practices are a helpful starting point, but we're finding support is needed. And so we have a program called the Women on Boards and in Business Leadership Program, where we're training women leaders on how to respond to the growing demand from companies to build their female talent. And we've trained over 700 women and male executives in over 20 countries. And then the last lesson learned to share is really around amplifying best practices and frameworks and data such as the Gender Balance Index. This is critical to being able to advance an awareness of practices and the business case. And we've partnered with the UN Sustainable Stock Exchange, working with them to develop guidance notes on how exchanges can promote gender equality. So these are just a couple of lessons learned from our experience. We, including everyone participating today, think the index sends a strong message that we need to find a way to advance gender diversity. So I encourage, as you listen to the experiences and insights from our great lineup of speakers today, to ask yourself, what can your firm do to create a diverse and equal workforce and create a proactive strategy around gender balance in leadership?
Thank you very much. Really appreciate the introduction and a fantastic presentation. So I'm joined today by Madame Sima Kamil, who is Deputy Governor of the State of Pakistan, the State Bank of Pakistan. Welcome, Madam Deputy Governor. It's a pleasure to have you with us today. So I'll jump straight in with the first question, because I think it will become very clear why we've invited you to speak today and why we're so happy to have you. The State Bank of Pakistan has introduced a landmark policy banking on equality, which has the aim to reduce the gap in financial inclusion. So my first question is why this policy has been implemented, why is financial inclusion important, and why is this important to the bank? Thank you so much, Madam Deputy Governor.
Well, thank you so much, Emma. Thank you for the introduction. And first of all, congratulations to everyone who's worked on this report. And as John said earlier, the results, while mixed, are a bit dismal. And that really is the reason why we have this banking on equality policy that we launched back in November 2021. The State Bank of Pakistan has two traditional roles, and the third objective we have is slightly non-traditional. The first, of course, is price stability, and then followed by financial stability. But the third one is to improve and support economic progress in the country in line with what the government is aiming towards. And one of the key issues that we face is financial inclusion. And The adult population is excluded to a large degree, and then women even more so. So if I could just give you some numbers, it's in our adult population, of course, about 52% are women, but they are 33% less likely than men to own a mobile phone and 38% less likely to use the internet. And in the financial sector workforce, when we began this program, women in the financial sector as a whole were just 13% working in the financial sector. And so that is a dismal number. And then women account ownership currently now stands at 28 million compared to 53 million for men. So the gender gap now stands at 35% and stood at 38% when we began this policy. So really, it's the results that we've been seeing of institutes like yourself in the report, as well as our own experience and our experience on financial inclusion, which drove us to come to the rather unhappy, shall we say, conclusion that we're going to have to force our way into this a little bit. And we have so many research studies that prove that what a difference it makes to the lives of women, which is like a basic right, and to the returns in the companies and the firms that are more diverse and more inclusive, both in their customer base and in their own management. But yet somehow, and that doesn't seem to be easily accepted. And so because of this, we introduced this policy. We called it Banking on Equality. And this policy moved from being gender neutral to being gender intentional, and using our capacity, our shall we say, our mandate as a regulator. All our regulated entities were asked after a great deal of consultation. It wasn't sort of forced upon them, but I think it was look, we took almost 2 years to come about it. And then eventually it came about, and the early results are encouraging. Again, as we all said, it's going to take a long time, but we're quite confident that it'll not take 140 years, as we were, which was a rather depressing statistic, which I also believe is not going to happen, because I think that once we have more women as customers and they're recognized with their special needs and their own and their, shall we say, their ability to contribute to the bottom line of the institutions, plus it will just naturally, and then you have a greater base of young women and women in the entry level and in the middle level. We will start to have more at the executive committee and board levels and in the decision-making area. So that really was the background why we need financial inclusion. Pakistan has terrible problems with the fiscal deficit, and part of that is a lack of a documented economy. So that's another part of it that's very important to us. So that's very briefly, and this Banking on Equality policy is on our website, and everyone is very encouraged to have a look at it.
No, lovely. Thank you so much, Madam Deputy Governor. And I think with policies like this, hopefully it really won't take 140 years. And one thing that stood out to me there is just talking about, and it's something we spoke about yesterday and undoubtedly will come up in the panel, is building up the pipeline and kind of building up that percentage of women who are joining at a young element of their career, which can then grow and develop. And again, I think that will be a key way to lower that number of 140 years. So could you talk me through the key pillars and the measures of the policy, kind of how the central bank is integrating all of that measurements and data, and what those key pillars are?
So there are basically 5 key pillars, all of whom which have now, I'm happy to say, finally been implemented. And then we are tracking progress as we move along. The first one, I think, relates very much to what we're talking about today, which is to improve gender diversity in the regulated entities and their access points. So we've asked all banks, and they've all done this, have a board-approved gender mainstreaming policy. So until the board and the shareholders buy in, it's not going to work. And so that's been done. And they will have diversity as well as inclusion. It's important to understand the difference there as well, because you can have diversity and yet they can just be a group by themselves and are not integrated and encouraged. And then, of course, the whole country has it for all companies, at least one independent female director. It used to be just one female director, but for our entities, we've said an independent female director as opposed to family owned, because many of the businesses are family owned. We started out at 13% in the workforce. In 1 year, they've reached 14.2. It's still very small. But by 2024, we expect that number to be 20% on average. And then to improve, also while we have the normal sort of banks, we also have what are branchless banking, which is agent banking. And over there, the women who run those little businesses are only 1%. And they have fought back a lot because they say there are cultural barriers and safety barriers. We have asked that this be taken up to 10%. And we're following that. And then, of course, very much important in all of this is gender sensitivity training to all staff, and then our own the central bank itself. So those are the key parts of this first pillar. The second pillar is women-centric products and services and targets. And so the regulated entities, and I use that word because it's not just banks, it's microfinance banks, it's electronic money institutions, payment system providers, and the whole host of them, have to have a specialized women's financial services department. And they will put a gender lens on all existing and new products. So no product can go through a product program or an approval unless there is a specific focus on women's needs. So if it's a savings product or a lending product, has it specifically catered for what women want, and not just, for example, what kind of education and savings plan do they want? And it's often that they want something for their children. Do they want to make sure that their funds and money are kept separate and they can save without anyone else having access to that information, and so forth. And we've also given targets for agriculture, for microfinance, for SME, for corporates, and for accounts. And we're seeing the needle moving on that. The third pillar is this concept of women champions at all access points. So this is not just branch, but also your app, also your call centers, and the whole range of access points. In fact, we've licensed 5 digital banks recently, and those banks, it was very specific that they must cater to women specifically with specific products as part of our approval process. So these by 2024, 75% of all access points should have trained women's champions. And the important thing is they don't just have to be women. They can be men as well, and they can be transgender as well. So that's all being put into that. And I think that's already quite good. And when we talk a little bit later about the results, that's moving well. We are now focusing very much saying, is it just the numbers, or shall we do some mystery shopping and to see if these champions are really champions or they're just a tick box, which is very important. The fourth and very important pillar is gender disaggregated data collection, which, while the data is all there, some of them, large banks with legacy portfolio and millions of accounts, did not have a gender marker. Even though we have a data from the government which gives everyone a number, and one of those numbers does denote gender, yet it was not collected specifically. So we have put in that program, and I'll talk about that in a little bit more detail because I think that's extremely important. But now they submit, all our regulated entities submit gender disaggregated data for financing, for account opening, and for the targets. And last but not least, we have a policy forum for gender, which we've taken in, known women, men, the government entities, lawyers, educationists, as well as other banks and the Pakistan Banks Association and the other associations of fintechs and so forth, who come and meet. This is led by our governor. And every quarter, or at least every 6 months, they will meet. And now actually, our first meeting was so successful that we've now made about 7 working groups to work particularly on the challenges and on the ideas that presented themselves. And so we've completed our first achievement, first year, more or less, in December of this last year. And the gender gap, as I said, has narrowed by 3%. Banks have increased the ratio to 14.2 of women in the workforce. We have about 40 regulated entities, and 34% now have women-centric products and services, which they've actually launched. So they are answerable for that. They've got names for them. They can either be products or product platforms. And 22 have established dedicated departments. 36% of staff have now got gender sensitivity training, and women champions are at 38%. So overall, we can say that we are, shall we say, happy so far, but as we say, we have a long way to go, and quality is one target, and the other one is SME, because that's still a very meager 9% of SME financing goes to women. So that's basically the framework.
No, brilliant. Fantastic results, and what an achievement that you've had so far. Just to go back to the data question, how is the bank collecting and developing robust gender disaggregated data to kind of get that further understanding and to develop the measurements?
You know, we did the estimation. This was actually done as well by outside sources, but we believe that financial services sector can actually has a $650 million opportunity if they adequately address this market. However, prior to this introduction and to the collection of this data, there was no quantitative evidence. So you go to CEOs of banks and say, oh, this is worth this much. They listen and they say, oh, yes, that's very nice. And the lip service is there. And the eyes glaze over a little bit after a while, unfortunately, and they don't really believe it. So we need to have data for them to actually believe this, that this, the value of the woman customer and the woman manager or senior manager or even junior level entry person. So, so to get this data, we needed to have good quality data. And then we looked at the quality. While the data was there, it was all over the place. And so then we gave a set formats to our regulated entities to report this data on accounts, gender diversity in the bank, and financing in particular to agriculture, SME, and microfinance, which is sort of market failure areas. And they also focus on revenue measurement and target measurement of the targets that we have set out. First, we did a scan of international best practice for collection and utilization. The challenge there is if you dump and ask them for huge quantities of data, one, they'll make mistakes. Secondly, they'll be really slow at it. And third, it'll just become a routine exercise, and it'll be very hard for us to make any sense of what comes out or to even rely on what comes out. And we went through a period of a whole year when what was coming in was rubbish and we had to send it back. Some banks were better than others, but others were very, very slow. Their IT systems couldn't cope. And so all of those, it needed a lot of patience. We needed a group. We needed to work with some banks individually to get this across. And it took really almost a year and a half to get this going. But now, once this is done, we are now able to use our own data warehouse facility to automate this collection so that it comes in automatically. We don't have to send reminders and so forth, and all these parameters that we have set. So now that we have this, we have monthly and quarterly reporting, and we can use this. And now that we have this, we can actually inform our policy, as well as now, once the base data is there, we can start to refine it and say, okay, if there is an account, is she truly the owner of this account? Or is she just a front and signs on the checks and doesn't know what she's doing? So those kinds of things and those kinds of refinements are being put into place now. So that's in brief the story, but if anyone's interested, our team can certainly talk to people about this.
Yeah, absolutely. And we'll certainly share information on this to our viewers after the session. Final questions. Appreciate we're running over time. How is the State Bank of Pakistan improving its gender balance within the central bank? I think obviously you are a key example of that, being the first female deputy governor. But yeah,
I'll be brief. I'll be brief because I know you're short of time. But when we started this exercise, we discovered that while we were telling everyone to be at 20%, we were only at 10%. So we took some emergency measures really to bring this. And by the end of 2022, we were able to take it to 18%, right? Because there's no point in giving them a target if we don't meet it. Some of the few things that we've done is that we've now got a senior level person who works on equality, diversity, and inclusion and is tasked with forcing it. We have a team of very senior managers of the central bank who will work to support her efforts and to bring in ideas themselves. There's a lot of mental barriers that have to be broken. They still exist. And I don't want to be the only person doing it. So they have to be male champions of change. And then, of course, we've gone through the whole policy on maternity leave, paternity leave, daycare and all the rest of it. And I think what we've done is that we have taken a batch of 45 women in the Emerging Women Leaderships Initiative. And that batch is going through training, and then we'll start working at the State Bank so that the numbers, the batch increases and we start to get a quantum leap because we cannot afford to be. So that's the kind of things that we're doing. There's a lot more that needs to be done. And to conclude, I just have one suggestion for you, that all these things that regulators are doing, this may not reflect quite in your gender balance, but perhaps you could put in some parameters in your survey as to what's happening in middle management and even at the junior levels. I think it's something to think about, which would be useful. But thank you for listening to me, and I hope I haven't overshot too much.
No, not at all. Thank you ever so much for joining us today, Madam Deputy Governor. Fantastic to hear the initiatives that the State Bank of Pakistan is undertaking and the incredible work that you're doing. So thank you ever so much for taking the time. Thank you. We'll be taking just a 30-second break in between the panel, and I will be turning over to my colleague Taylor Pierce, who's senior economist here at OMFIF. Yeah, we'll be taking a 30-second interval, and then we will begin the panel discussion. Thank you so much.
Hello and welcome back, everyone. Thanks for joining us today for our Gender Balance Index launch. Thank you very much to Emma and to the Deputy Governor for that very interesting conversation about what the State Bank of Pakistan is doing on gender equality. It's a pleasure for me to introduce our panelists for today's discussion. So we have Anelia Ungurasen, founder of the EDGE Certification Foundation, Katja Perman, senior advisor and the focal point for women in the UN system, Carlos Mayorga, global senior manager of private equity for the IFC, and Sophia Abu, head of the Financial Inclusion Gender Desk at the Central Bank of Nigeria. Unfortunately, Anita Peña Saavedra, head of the International Department of the Ministry of Women and Gender Equality of the Chilean government, hoped to join us today, but unfortunately, due to technical difficulties, she's not able to. So with that being said, I'd like to jump right in with the questions for our panelists. So often in these discussions, we talk a lot about policies and initiatives, but I want to start off with the bottom line. Why does gender balance matter in senior leadership? And maybe Katja, I'll come to you first.
Great, thank you so much. Thank you for inviting me today, and congratulations on launching the report. Regarding your question, yes, absolutely. Gender balance in senior leadership matters. As we know from research and as we heard before, it results in better performance, better productivity, retention, and inclusive organizational culture. And we sometimes refer to a diversity premium, which means the greater diversity and inclusion a company has, the better productivity and performance it achieves. And this is why gender parity is a priority also for the United Nations Secretary General. And for him, gender parity is a moral duty and an operational necessity. So for us at the UN, diversifying our workforce is the smart thing to do, as well as the right thing to do. And for the first time in the UN's history, we have actually achieved gender balance at the highest ranking levels. And these are called Undersecretaries General and Assistant Secretaries General. And as a result, we have become more representative and therefore more credible with the populations that we serve in the field. And this is really thanks to the Secretary General who has led by example. So yes, we firmly believe that we need more women at all levels, and in particular at the top, be they in the UN, be they in finance or in politics, everywhere. And it is very simple reason for why. Again, better decision-making, improved organizational performance, enriched leadership discussions, and inclusive policies and practices. And we all know this, when more women work, economies grow. And we are talking about 50% of the population. And I believe it was Heather who said earlier, we do have a very, very clear business case here. And let me also add that when we have women at the top, they also become very positive role models for the future generations. Over to you, Taylor.
Great, thank you so much. Congrats on those results, and we'll come later to some of the initiatives that UN Women have put in place to have such success. Carlos, I'll come to you next. In the opening remarks, Heather spoke about some of the work the IFC is doing in terms of active ownership practices to encourage gender inclusion. What are the benefits of gender diversity in leadership positions, specifically within financial institutions?
Great. Thanks for the question. Great to be here. I think when I first reflect on this, starting with financial institutions, which are the core of IFC's business, we have banking and commercial banking institutions, and we have funds, which is what I'm managing today. The benefits include, I think in today's environment, people seek innovation. Everything's driven by innovation, new thinking, and actually matching your own values with your actual job. I think that's very important to attract the best people. So I think one benefit is giving entities the opportunity to actually achieve that, to not just talk out of two sides of our mouths, but actually be providing an authentic experience where we can attract the best talent by being mindful of gender balance and diversity. So that's one benefit. And related to that, it's really the representation of what our leadership looks like versus what the consumer base and many times the staff of our entities have within them. So as was also already mentioned a bit, once people see that we have balance at the top, they can much better identify and much better seek opportunities, seek innovative solutions that they might otherwise be a bit less prone to do. So we found the benefits early on. Like others, we also were a bit behind. So we first did a self-reflection before we defined where we wanted to go. And I was very involved in the financial institution side on the banking sector, where we saw, okay, we are at about 11% gender balance on the board seats that we can put on boards across the world. Quickly, one then realizes that obviously the best candidates for those positions are not within our own walls. So we started looking more broadly. So this requires some strong partnerships with other entities that we may get to later in the panel. But as far as the benefits of performance, those are very clear. Heather mentioned some of them. I think now it's been demystified. It's not really so much a debate anymore. Maybe around the edges it might be. In addition to the 20% observed increased in median performance in the study that IFC did, we had taken a look at 6,000 funds and 5,000 companies, of which about 10% actually provided the data. So to the point of the deputy governor of Pakistan, I think data access is quite important to achieve our goals, but we found through that in valuations as well, you see an uptick in private equity and VC funds, for example. Once you have gender balance. And sometimes it's also important to keep in mind that we don't want to over tip the balance, because some of this is observed in male dominated or female dominated situations. So luckily the glass is not yet half full, which is what at a minimum we should get to. But I think diversity and true parity at the least is something that we strive for. So again, on the performance side, quite clear for us. And then on the access to funding, for venture capital, private equity, this is the bread and butter, not just for the general partners and fund managers, but when you're talking about the earlier ecosystems for developing a business, access to funding actually for women entrepreneurs that are being funded by these players in the private equity and venture capital space, as was seen in Pakistan example, I think was mentioned a bit. Only about 7% of the deals done by male partners are to women, where if it's by women partners, that number is almost double at 12%. These are both low numbers. Coincidentally, World Bank Group IFC, we are working in Pakistan, for example, to help increase entrepreneurship opportunities for women. It's actually quite an exciting time for Pakistan with the leadership that we've just seen in the previous discussion that helps give the underlying support for a growing possibility to increase gender balance in the country and hopefully in many other countries. And, I agree, we don't have 140 years, but possibly it'll be a woman that invents something that will let us all live another 140 years. And we need to make sure that we create the space for entrepreneurship, allowing for that. And so lastly, I would just say, it's a benefit in my mind, but in some ways, it's self enhancing when we actually realize and start delivering. Now entities also are expecting this. So when your business is about fundraising, it's about reputation, it's about track record. Investors are really expecting that there's much more advancement in this area. And so we're now getting much better and getting muscle memory on immediately seeing when something is off, and investors will not be very patient for very long, I think, on this. So I think it's a benefit for those that are raising funds, that rely on continued loyalty from customers and investors, and that really need to catch up on this to actually have a credible business plan going forward. Yeah. Those are my thoughts on this.
Great, thanks very much, Carlos. And you mentioned the 140 years, which was the headline figure of this year's Gender Balance Index, and that figure represents the amount of time it would take at the current rate of progress to reach gender parity, in leadership positions of financial institutions. Clearly, this is nowhere near fast enough, so this figure is also a call to arms. Sophia, I'll come to you first. What can we take from these results, and how can we ensure that we speed up this process to increase the share of women in leadership positions of financial institutions?
Thank you, Taylor. So there's so much that can be taken from these results. I think some of the more interesting insights from me include, for instance, the fact that out of all the central banks that were in the study, more than half of them, the ones that have female governors or female leadership, more than half of them sort of rose through the ranks, right, in the central bank. And for me, that speaks to the need to ensure, like we were talking earlier about the pipeline, right? You need to ensure that you're building more competent women, right? You're enabling more competent women to rise through ranks at central banks. You're ensuring that there's opportunities and the enabling environment for them to sort of rise, and that is critical. I think another important thing for me, which I took out of the result of the report, is the fact that there is progress, but we've all noticed that progress is really slow, right? The numbers, the overall sort of gender balance index scores have risen across the different groups by just about 1% to 2%. And so there is a lot more that needs to be done. I think when you look at commercial banks as well, when you see the sort of slow pace at which there's leadership happening in their institutions. There must be intentional effort, I should say, right? I will say about Nigeria, for instance, in 2021, I think it was, there was sort of an exponential rise in the number of female CEOs at in financial institutions. And for us, that is something to be proud of. But even when you look at those numbers, you still see that in terms of that number in totality, it's still a small percentage of the entire number of CEOs in commercial banks. And so really, the insights really show us that there must be concerted effort across institutions to ensure that we're sustaining growth of women leaders across board.
Great, thanks, Sophia. Aniela, I want to come to you with the same question and a follow-up question. As mentioned by the Deputy Governor and Carlos as well, data is clearly very important in driving forward some of these initiatives. So first question, what can we take from these results? And what kinds of data should institutions be collecting on gender diversity to facilitate better results?
Thank you, Taylor. And we've been through this together a number of years now, right, in publishing this report. And it's so interesting that we keep saying the same thing. In the beginning, when we look at the results, we are moving in the right direction, but we are not moving fast enough. And some of the elements to your question, for me, what was striking when we were looking at the results of this report is that many organizations, when thinking about what they need to do to foster workplace gender equality, we still see flexible working and childcare support as being the programs that are most often associated with the efforts towards gender balance. Now, of course, childcare support and flexible working are table stakes for everybody in the organization. But I think it's very interesting to see to which extent actually these actions just reinforce the need of allowing women to continue to be primary caregivers while building a career, as opposed to actions that are focused in allowing women to have thriving careers, to be, as Sophia said, competent, empowered leaders, while being caregivers. So those actions that relate to what do we do to ensure growth inside organizations? What are the mechanisms to ensure access to career critical assignments, to stretch assignments? How do we measure, remediate, and communicate on pay equity? For example, we saw 42% of the institutions are measuring the pay gap, right? How do we ensure that the career flows are actually contributing to building a higher representation? And then it comes to what you said, what are the things that need to be measured? You might have seen also in the presentation in the beginning, we talk about hiring, right? Now, hiring, it's an input. It is a driver of change for representation. But in addition to hiring, we also have the exit flows and the promotion flows that influence representation. And we see many organizations focusing a lot on hiring and on the hiring flows in an attempt to transform representation, because organizations feel that that's the flow that they can control. They are in control of whom they recruit, to whom they make job offers to. And then we see phenomenal efforts to bring in women and diverse talents inside the organizations, promotion flows for these type of talents being stopped, and exit flows being sky high. So I think that, there are these hard-hitting numbers that we need to look into, which is, of course, pay and pay equity numbers, but also, in addition to looking at the representation numbers, to measure the flows of hiring, promotion, and exits in conjunction to understand what we need to do to improve that representation, as well as to measure the percentage of women in P&L responsibility role in the high potential population and the percentage of women that are given access to those career critical goals and stretch assignments.
Great, thanks. And I think that's something that we've seen, as you mentioned, over the past few years. Something that's often mentioned is we can't just diversify the entry level and expect that parity will flow up the pipeline. We have to be more actively ensuring gender inclusion at every career stage. Katya, I'll come to you next with the same question. What kinds of data should institutions be collecting on gender diversity? How can these be translated into key performance indicators, and what UN Women is doing here?
Thank you so much, and I'm very glad that you're raising the importance of data. Based on our experience, gender disaggregated data, regular monitoring and reporting, as well as visibility of inequalities, play such a critical role when we really wish to see and make a change. So what we've done as UN Women, we have created a dashboard on gender parity, and it covers the whole United Nations and 128,000 staff members. And this dashboard consolidates numerical data on the representation of women and men by grade, staff category, types of contracts that we have, duty station, as well as age group. And this allows us to identify gaps and also, of course, celebrate good results. And this dashboard is, in fact, very, very practical tool. It provides hiring managers with up-to-date information prior to any recruitment process. So no one can say, well, I wasn't aware of these numbers before. So this is really up-to-date information that we have there. And we do update the numbers on a quarterly basis. And what is important here as well is that this data is publicly available. And this creates, we believe, an additional incentive for individuals and organizations to make progress toward gender parity. So greater transparency has also a great impact on promoting equality. We as UN Women have also recommended that all UN organizations should develop action plans on how they will reach gender parity with very clear targets, goals, measures, timelines, and then, of course, division of responsibilities. So who is doing what, when, and how? And then we report this information to the UN General Assembly, which means the UN member states who hold us accountable. And by doing this, by reporting on progress and challenges to UN member states, we can help to keep the issue of gender equality and parity at the forefront of our global agenda. Now, another effective measure, if I may, is to include indicators on gender parity in performance appraisals. And it's very, very efficient accountability measure. And we've seen that it really works. We have also something called gender equality marker that was made mandatory for all our UN entities. It's a tool to track financial allocations and expenditures according to the contribution to gender equality. This helps us to identify where the investments are happening and where we have gaps. So to conclude, data is essential in advocating for change, achieving targets, and really creating accountability. And what is also important is visibility, availability, and access to such data. Thank you so much. Over to you.
Thanks, Katya. Some really inspiring work going on at the UN, so that's great to hear. Coming to a slightly different point, obviously data is very important, having targets, objectives, policies in place in different initiatives. But something else that came out of our research this year when we conducted interviews with 6 experts from the financial industry, all of them noted that there is a quote-unquote childcare tax or other cultural factors in workplaces that can also hinder gender balance in the financial sector. So Carlos, I'll come to you. What can you say on this? What strategies and policies should be in place to drive a more inclusive and diverse culture in the workplace?
Thank you. So an approach to address the childcare tax and the cultural factors promoting female representation first is to support the internal environment that doesn't force a choice between family and career. And I think this was mentioned a bit in some of the strategies ourselves. We find that offering at a minimum maternity leave benefits, but also when we detect that about 25% of the surveyed private equity or VC firms in our IFC study did not offer maternity leave, and more than half did not offer paternity leave. You know, this for junior employees. Also, women were more than 3 times likelier to believe that taking parental leave would greatly inhibit their careers. And also when offered, men seldom would take parental leave in some cases, much less often than women in about 64% of firms. So this is consistent with other research more broadly, suggesting that men's use of paid parental leave is generally lower than that of women. And creating and accepting culture around equal parental leave benefits, again, is important, and senior leaders have to walk the talk and set the clear tone that taking parental leave will not impact careers. I think a lot of this, and maybe I do think the COVID period and home-based work has opened up some possibilities that before we kind of self-censored, where entities like including mine had a lot of flexibilities, but nobody used them. I think now we have observed, at least in home-based work and other areas, that we are able to do things without fears for our careers. And I think keeping in mind all types of families, including single families, married families, non-married families, different genders, opens up the ability to have the right culture improvements, which are not easy to make. And I think we also have some things to keep in mind that are detriments to advancing in some cultures, which have very calcified views that, you know, even women might still have, where this is an effort that requires a lot more thinking, a lot more continued support to help think through issues and break through certain barriers that just exist culturally in some regions or countries. But of course, we see improvements and we drive those improvements. I was glad to see some of the countries you mentioned that have made advances, Tunisia, Seychelles, smaller countries, larger countries. In emerging markets, this makes a huge difference, and we're starting to see upticks. So I think just to close, you know, we do have an opportunity, in my view, at least, that we can keep benefiting from flexible work arrangements to some extent. Not everybody will do what we've done up to now in the last couple of years, but I think we have to take note that this did provide families, women, and those seeking gender balanced opportunities, further flexibilities that can continue providing a lot of, I think, progress in this area. And it's important to be inclusive in our diversity. It was earlier mentioned that, you know, you have diversity of inclusion. How do the two support each other? From the beginning, our own women's network at IFC, which is a staff resource group, was not limited to women. And actually, once the millennial group started, that actually arose from the women's network, even though it was a broader thing. So I think just really supporting staff resource groups and ways that people not only have a voice, but also have a listening ear on how they can address their own needs to feel included and to advance in a corporation that they believe in. Mentorship, sponsorship. We created a sponsorship program a few years ago that it was largely driven not just to general diversity, but also targeting opportunities and leapfrogging stretch assignments and things for specifically strong female candidates. We are more concerted now about talent reviews, where management spends tremendous amount of time speaking about each and every person and the opportunities, which do include our diversity and inclusion targets. So going to the point of accountability, and we don't do what we don't measure. So we suggest taking a very clear view on what we expect and hold ourselves accountable. Lastly, of course, zero tolerance on issues like racism, other forms of unacceptable behaviors, but also we need to provide tools such as unconscious bias training, other ways to kind of erase the things that are lurking more behind the scenes that are preventing us from advancing as much as we would like.
Great, thanks. I also just wanted to mention we have an audience question, which I'll come to in a minute, but anyone who is tuning in, please feel free to pose any questions to the panelists as we go along, and I'll try to incorporate those into our discussion as well. Yeah, thanks for that comprehensive overview, Carlos. So this is also something that we found from our survey, as Erin mentioned in the key findings. We surveyed 46 central banks this year on their gender-related HR policies, and we found that paid parental leave and flexible work are the most common policies linked to gender equality. I think COVID probably has a big role to play in the fact that so many are offering flexible work policies now, but few mentioned that they have dedicated resources to offering mentorship or leadership programs, which is something you mentioned, Carlos. Sophia, I'll come to you. How important are, first of all, equitable parental leave and flexible work schemes? You've touched on that a bit before, but what other policies should central banks have in place to facilitate women climbing up the career ladder? And what is the Central Bank of Nigeria doing here?
Thank you, Taylor. So, I mean, we've been speaking about the critical importance of parental leave, flexible work policies. These are all important because, I mean, it's no secret that over the years, traditionally, women have borne the brunt of domestic responsibilities. And so that sort of is something that they then have to sort of try to balance with their careers. And so given the opportunity for both men and women to take parental leave helps to sort of even out that responsibility so that the women then have more time on their hands to be able to pursue career opportunities and growth and which puts them in the right place and right sort of trajectory for leadership positions across institutions. Now, speaking specifically around what central banks can do, I think the first thing is to have intentional diversity policies, right? And so not just in recruitment, but like Aniela had mentioned, you need to also be looking through the ranks, ensuring that in promotion, there is equitable and fair sort of opportunities for women and men to be able to rise through the ranks. I think also mentorship programs are very important. When you have more women that the younger women look up to in institutions, it helps to enforce the fact that this is possible for them as well. And so helps them to ensure that they are at the back of their minds, working towards and aspiring for leadership positions. I think another thing that's important, and you had mentioned as well, Taylor, is around the need for dedicated resources. Now, both human and financial, right? Human resources in the sense that there must be intentional, for instance, HR personnel who are looking at the diversity within the institutions. For us at the central bank, we regulate financial institutions, right? And so when you have sort of targets and at Central Bank of Nigeria, we have targets for the financial institutions that we regulate to have at least 30% of their management and board being female. You must look internally, ensure, like the deputy governor at the State Bank of Pakistan had said, you must ensure that you're doing the same as well internally. So it's important to have these intentional diversity policies. It's important to have dedicated resources. I think mentorship, like I mentioned, is very critical. So these are some of the things that I think central banks should be looking at.
Great, thank you. And that was another one of my questions later, how important it is for central banks to walk the walk internally when carrying out external policies. So I'm glad you mentioned that as well. Aniela, I want to come back to something which you raised earlier, which is that also from our research and conversations we've had with experts in this field, including yourself, we see that a lot of attention is paid to diversifying the incoming entry level, but that less attention is paid further up the career ladder or pipeline. So what recruitment practices or retention practices should be put in place beyond this entry level? How can financial institutions ensure retention of women all the way up the career pipeline? And maybe what does EDGE recommend here and successful use cases you've seen with organizations you work with?
Thank you, Taylor. I mean, we are in a very privileged position to see that we have successful cases because some of the top-ranked financial institutions in the index, such as CPPIB and Standard Chartered, are EDGE certified. So that is the proof that intentional, as it was mentioned, prioritize and measure approaches do work. And then to your question, there is something else. We talked a lot about the transparency around the data. But I think that there is another very important element, which is the accountability. Carlos, you touched upon this, right? Because we can look at the data, we can publish data, we can make it available year after year, and the data doesn't move. But we kind of don't hold ourselves accountable to be more ambitious and to do something to change those numbers. So in coming to those more ambitious policies when it comes and practices, when it comes to recruitment, promotion, and retention, I think that really the first step is for the organization to set those very clear targets at the different levels of representation in the organization, because it is indeed something that happens at every level. We do see organizations making tremendous effort to hire very senior women at the top of the organizations, and then there is an organ rejection going on because the culture of the organization simply rejects those diverse talents, and this is extremely expensive and traumatizing for everybody involved. So having very clear targets for representation at every level and translating those targets into what does it mean if you want to have this composition at this level, what do we need to do in terms of recruitment? What do we need to do in terms of promotion? What do we need to do in terms of retention or exits is very important. And of course, gender diverse candidate pools, gender balanced recruitment panels, as well as this kind of, we see a number of emerging practices, these bias reminders. So, you know, when a hiring committee gets together, when a promotion committee gets together, somebody reads out loud and said, okay, so last time when we got together, we promoted John and Jack and William. So let's see whom we are promoting this year, or simply having a bias checker, which is part of the conversations on the candidates that are about to be hired and about to be promoted. And last but not least, which I think it's very important, we all have seen, read, experienced in our organization, the Great Resignation. And there too, organizations, although it is a very emotionally charged and difficult experience for everybody, I think that organizations do need to make that effort to have a very targeted approach for those exit interviews and to ask in very candid ways, in non-threatening environments, why women and diverse talent are leaving the organization. And the answer is not because of caregiver responsibility in most of the cases, but it's the lack of growth opportunities, the lack of role models, the fact that they are very often the only person with a certain set of characteristics across the table, not feeling included in the decision-making power. So these are some of the things that through the EDGE framework, we are putting in place, taking organizations not only to committing and to acting, but also to be accountable for their results in front of their internal and external stakeholders through an independent third-party review and mechanism.
Great, thank you. That's a really good point. I think it's so important when we do talk about these things that we're also acknowledging the lived experience of the women or other minority groups that are disadvantaged in the workplace. And like you mentioned, you know, understanding why in those exit interviews is very important. We can't just assume that it's always parental leave or XYZ. Katja, I want to come to you with the same question. What recruitment practices should be in place beyond the entry level to ensure women are advancing, and also what kinds of policies are important in terms of retention and what UN Women is doing here?
Thanks so much, Taylor. And let me just first say that very much agree with what Aniela just said. Excellent, pertinent points, and a lot of what I was going to mention. So I tried to sort of perhaps strengthen those points or add something from our part. I mentioned earlier that we have achieved gender parity at the highest senior levels at the UN. We still, however, face challenges underneath those categories, director level, management levels, etc. Also, we face challenges in the fields, and particularly in sectors which are traditionally male-dominated, such as IT, security, peacekeeping. So what has helped with us? We have recommended the use of inclusive vacancy announcements to attract more women candidates, and really at all levels. So what we try to do is to emphasize potential, not only experience. We try to include specific value statements to demonstrate the organization's values of diversity and inclusion. Also, what was already mentioned, we try to strengthen targeted, regular outreach to potential female candidates. We also show professional women in the vacancy announcements and websites and so on and so forth. We have also career pipeline initiatives. One is called UN Senior Women Talent Pipeline. It provides targeted training and development opportunities to support senior women leaders interested in high-level positions. Then what is important is to look at recruitment practices. Within the UN, we have developed unconscious bias checklists, which are tools for raising awareness and really mitigating unconscious biases during hiring processes. Because we know that according to research, we tend to hire people that are similar to us. Also, there is still a wealth of stereotypical thinking how men can be seen better suited for certain jobs, such as security, IT, STEM, etc. And these stereotypes need to be challenged. We also have temporary special measures in place at the UN, sometimes called as affirmative action. And these apply to recruitments in entities where gender parity has not been reached yet. So when you have two equally qualified candidates, you should choose the woman in case you have more male staff in your entity. Now, once the women have been recruited, we should keep supporting women's career advancement through different career initiatives and leadership trainings. Colleagues here have mentioned coaching, mentoring, but what is also very important is networking. And I believe also the men need training to unlearn certain practices and persistent stereotypes. Now, also what is important, we have adopted a model policy on addressing and eliminating sexual harassment. We know that globally, 50% of the women who have experienced sexual harassment will leave their jobs within 1 year. So this is why we really need to have clear policies and accountability measures in place. And just let me, to close, let me mention that we have created something called Enabling Environment Guidelines for the UN personnel. And these guidelines include good practices and examples on how to really create enabling work environments, because gender parity is not only about numbers, as we know, it's also about changing the organizational culture. How do we really apply family-friendly policies? How do we push for more flexible working arrangements? How do we create truly equal opportunities for all genders? Over to you, Taylor.
Thanks very much. And you mentioned something interesting there in terms of the affirmative action or kind of targeted policies toward recruiting women. And I wanted to pose this to the whole panel, but maybe Katja, I'll pick on you since you mentioned it. A common criticism of some of these types of policies to promote diversity and inclusion is that they don't attract the best talent or that they're not meritocratic. How would you respond to this criticism?
Would you like me to start?
Sure.
Okay, great. So merit is the paramount consideration for us at the UN, but it is interesting, isn't it, that sometimes when we discuss employing more women, it can become a conversation of whether merit is being compromised and how we need to make sure that we recruit qualified women. Now, how many conversations have you witnessed where the merit deficit has been a major concern when recruiting a man? So to be frank, we do not believe that diversity and gender parity will lead to undermining the quality of workforce. On the contrary, we believe it will attract more of the best talent. And, as our Secretary General has said, it's time to stop trying to change women and start changing the systems that prevent women from achieving their potential. So we should respond to any concerns of this kind with data. Research shows, as we have discussed during this very, very interesting panel discussion, that in several countries, the gender gap in education has long been closed. In numbers, women hold more advanced degrees than men, so there are many qualified women in the world. So we should simply no longer have this concern whether women are qualified or not. They are. Over to you.
Thanks, Katja.
Taylor, if I may, because Katja said something that is very interesting, we absolutely have to confront this kind of assertions with data and with a little bit of emotion. So that will be my contribution. I think that assertion that the efforts to promote gender balance and diversity, equity, and inclusion, it's contrary to the principle of meritocracy, has the merit of being both inappropriate and inaccurate. And inappropriate, why? And I think that we do have to say it out loud, because the embedded assumption is that women and diverse talent are a lower quality talent than the talent that the organization has as a historically overrepresented talent. This is what we are saying. And I think that it is important to call it out loud because it confronts us with the reality of those underlying assumptions, more or less conscious, more or less unconscious. So this is why this is inappropriate. It is inaccurate, Katja mentioned it, in a world where ambition, higher education, talent, desire to succeed is not spread based on a gender consideration. How can we think that having organizations that have complete unbalances in one direction or another throughout their pipeline are really recruiting the best talent for their organizations? True meritocracies are very few. And true meritocracies are meritocracies that are diverse, equitable, and inclusive. There is no other way.
Thank you for that. Carlos, did you want to come in on that as well?
Yes, I will. I know we're running out of time. This is a very important part of the discussion. So I think this is clearly debunked. It's a lazy thinking to say that we can't find the right people, and we can drive everything through merit, or I think the way it was framed before, Aniela, or Katja, I forget which of you said this, but it's focusing on the potential versus the experience, because what I found when trying to add more women on boards in financial institutions that we had over 100 of them where we could put board members, the typical background that you seek are somebody that's already been a CEO or somebody that's already been on several boards or somebody. So by definition, you're just starting to exclude everybody from the beginning. So we have to redefine that. I think others have mentioned this kind of tool where we said, look, a board is not, companies already have experts. So not every board member in a bank has to be, has to run a bank, for example. So we pierced that thinking and then started aligning also with other entities like Women Corporate Directors out of New York, which works across the world with a network of top women that are on boards. And we just made the concerted effort to find that top talent because we knew it did exist. We never thought it didn't. So people do use that as an excuse. And then we found, that when you are more concerted about what you want in those positions, then and build it towards the future, which means the potential, you actually start excluding males that would not have risen to the top as the women who we will find by actually being concerted about all of this. So that's kind of conceptually the main thing I think about this. And I think when it comes to, just to close with fund managers and in the fund environment, I think also very similarly where now when entities start thinking, okay, I don't need just somebody that's run a fund or somebody that comes from investment banking, which are two traditional places. Can I find somebody that knows about value added in a certain area that I can actually incorporate? They can learn the other aspects. They don't necessarily have to do the fundraising part, but just find the talent to drive value in different ways. And in the end, hiring and promoting has a subjective element. So we can be subjective in a different way to make sure that we don't commit the same mistakes of the past.
You, Sophia, did you want to comment on this? Otherwise, I'm mindful we only have a few minutes, and I would love to come to financial inclusion and gender. Do you have a preference?
Absolutely. So I would just speak very quickly on this point, and then we can move to the next one. So I think there was something that Katya said, which sort of stuck with me. She said, we need to stop trying to change women and change the systems, right? And so there's so many excuses when we start to talk about, meritocracy and women's opportunities in leadership positions and across institutions. Some of the excuses that we've heard, for instance, is if you put out sort of like a recruitment, or you're trying to recruit people for a certain position, there's more men that would show up. And so unintentionally, they're hiring a lot more men just because the women aren't showing up, with the same velocity or the same speed or the same sort of talents. And so I think these are really just excuses. We need to focus on the fact that there are opportunities. There are women who have merit, who have the talents, who have the competencies, just really looking at ensuring that the system in which they are coming into does not exclude them or does not provide barriers for them to actually, grow in those systems, I think is what we need to be focusing on, as opposed to the conversation around meritocracy. Thank you.
Yeah, thank you. And we're very close to running out of time. Could go on for a long while, I think. And unfortunately, I'm not going to get a chance to turn to the audience questions. I apologize. But my final question, we've been talking a lot about internal policies, which of course is so important. As we mentioned, it's so important for central banks, pension funds, sovereign funds, commercial banks, all financial institutions to walk the walk, and especially for policymakers to walk the walk internally when carrying out external policies. I just want to quickly zoom out a bit, come to Sophia and ask, what role does gender inclusivity play in financial inclusion initiatives, and how the Central Bank of Nigeria is addressing these two together?
Thank you, Taylor. So for financial inclusion, I mean, the case and the business case is clear, right? At the end of the day, when we look at financial inclusion, we're looking at the provision of resources, financial products and services, that meet the need of the populations at affordable costs. That is specifically what we look at when we talk about financial inclusion, especially at the Central Bank of Nigeria. Now, when you talk about gender inclusivity, I can speak to some numbers, for instance, here in Nigeria, where we know that of the entire population, there is an 8% gender gap in access to financial products and services. Now, overall, that looks like a small number, but if you look at the Nigerian population, there's over 200 million adults. If you look at the different geographic locations across the country, that number gets even wider and wider and wider across certain regions. And so at the Central Bank of Nigeria, there is a dedicated there's dedicated efforts to ensure that we're closing the gender gap in access to finance. Some of the things that we've done, we have a national financial inclusion strategy, for instance, in Nigeria that identifies vulnerable segments. Women is one of those segments. And so if we are to actually achieve the goal, which we would like to achieve, we must be intentional in advocating for improved access to finance for women. At the Central Bank, we've recently, in the last 3 years, launched what we call the Framework for Advancing Financial Inclusion for Women in Nigeria. And very similar to what the State Bank of Pakistan did with the pillars, there are pillars around ensuring that we're collecting gender disaggregated data so that we're properly informing policy. There are pillars around ensuring that we're advocating for financial and digital literacy for women, just to ensure that we're closing those literacy gaps, which we hope and believe that it would then translate to closing the inclusion gaps. There are pillars around ensuring that the channels to reach the women, because Nigeria is a very sort of largely vast population. So we're ensuring that women in rural areas are able to access these channels to be able to access the products. And so there is a lot of work going on around ensuring that we're reaching the target that we would like to reach and close the financial inclusion gap. I know that we're running out of time, so I will stop at this point. Thank you,
Thank you very much, Sophia. It was fantastic. Like I said, I would love to explore this topic for much longer, but unfortunately we're out of time. So I just want to thank all of our panelists, Sophia, Katia, Aniela, Carlos. Thank you very much for being here, and thank you for our audience for tuning in. This is very important work, and it's something that we look forward to continuing our research on, and hopefully we can prove that 140 years wrong and see that that gender balance we will achieve gender balance much more quickly than that. So on that note, I will hand it back over to our CEO, John Orchard, for the closing remarks.
Thank you, Taylor, and thank you to the panel for, I think, an excellent, absorbing, clear, and practical discussion. And an inspiring one, I think. This was excellent. Thank you also to the OMFIF research team, past and present, I must say, for this important body of work. Please do share it far and wide, as we've already been doing on LinkedIn and elsewhere. I hope we all disbelieve the 140-year number. Of course, it's a polemic extrapolation of the current glacial pace. There's every reason that that might change. We've heard lots about the practical impediments, but also the real progress in some places. It's a multifaceted area, taking in every element of the hiring and HR process, as we've heard, a wide-ranging set of data and disclosure, including towards investors, but also areas such as pension and tax policy, and the way the economy measures being at home to raise a family for men or women. We've started to talk about important issues as well, which I would say are new this year for us, such as how to ameliorate the challenges of the menopause. These things also need careful thought. But also, I think there's no doubt we'll have to keep restating first principles. If fairness isn't enough, then let's repeat and socialize those measurable performance benefits we've heard about numerous times today, and that clearly benefit the organizations who get them fixed. So let's do that. But finally, thank you again for being with us, and do please share this report far and wide. Thank you all very much for taking part and for